The stock market. A chaotic symphony of numbers, emotions, and fortunes. But what happens when that symphony suddenly hits a sour note? A market crash. The words alone can strike fear into even seasoned investors. Yet, behind the headlines of panic and doom lies a less obvious truth. A market crash is often a golden opportunity in disguise. Yes, you heard that right. A golden opportunity. And today, we're diving deep into why the smartest investors view a downturn not with fear, but with excitement. Let's set the scene. Imagine this. A market that's been climbing steadily for years suddenly takes a nosedive. Stocks you once thought were out of reach are now sitting at prices that seem, well, too good to be true. It's the kind of moment where fortunes are either made or missed. But the key to taking advantage of such a moment isn't just luck. It's strategy. And by the time you're done watching this video, you'll have a roadmap to navigate these turbulent waters like a pro. So, why do markets crash in the first place? It could be a myriad of reasons: economic downturns, global events, or even a bubble that's been growing unchecked. But here's the kicker. No matter the cause, history has shown us that markets always recover. Always. It's not a matter of if, but when. And for those with patience and a clear plan, this is the time to strike. Take a moment to think about some of the most successful investors in history. Names like Warren Buffett, Peter Lynch, and Benjamin Graham. What do they all have in common? They know that wealth isn't built in times of prosperity alone. It's built in times of adversity. In Buffett's words, be fearful when others are greedy, and greedy when others are fearful. This philosophy is the foundation for turning market chaos into opportunity. Now, you might be wondering, how exactly can you seize this moment? It starts with understanding value. When markets crash, stocks often become undervalued. Companies with strong fundamentals, reliable earnings, and competitive advantages suddenly go on sale. Think of it as a clearance event for some of the most promising investments out there. The trick is knowing how to spot these gems in a sea of uncertainty. For instance, let's talk about blue-chip stocks, household names that have stood the test of time. Companies like Apple, Microsoft, or Johnson & Johnson. These giants often weather market storms better than smaller, riskier ventures. When their prices dip, it's not a sign of weakness. It's a potential buying opportunity. And the best part? When the market eventually recovers, and it always does, these stocks tend to bounce back stronger than ever. But it's not just about blue-chip stocks. Emerging industries can also present incredible opportunities. Take a look at sectors like renewable energy, artificial intelligence, or biotechnology. These areas are shaping the future, and a downturn might be the perfect time to get in early. Imagine investing in companies that lead the next big wave of innovation, all at a discount. Of course, investing during a crash isn't without risk. It's crucial to do your homework. Analyze a company's balance sheet, debt levels, and growth prospects. Look for businesses with a solid track record and the resilience to weather economic storms. And remember, not every stock that's cheap is worth buying. Some companies are cheap for a reason. They're struggling, and the odds of recovery are slim. This is where a bit of research can make all the difference. Now, let's pause for a moment. If you're finding this video insightful so far, don't forget to hit that subscribe button. By subscribing, you'll stay updated with more content like this, helping you navigate the world of finance and investing with confidence. And hey, while you're at it, give this video a thumbs up. It really helps our channel grow. All right, back to it. One of the biggest mistakes investors make during a crash is letting emotions take the wheel. It's easy to panic when you see red across your portfolio. But remember, the market rewards those who remain calm and think long-term. Selling out of fear often locks in losses and prevents you from reaping the rewards of a recovery. Instead, focus on your strategy, stick to your plan, and most importantly, keep a clear head. Let's also talk about dollar-cost averaging, a strategy that's especially effective during volatile times. Instead of trying to time the market, which is nearly impossible even for the pros, you invest a fixed amount at regular intervals. This approach helps you buy more shares when prices are low and fewer when they're high, ultimately lowering your average cost over time. It's a simple yet powerful way to build wealth consistently, even in uncertain markets. Another tip? Diversify. Don't put all your eggs in one basket. A diversified portfolio, spread across different sectors, industries, and even asset classes, can help mitigate risk. If one investment takes a hit, others in your portfolio can help balance it out. It's all about creating a safety net that can withstand the ups and downs of the market. And let's not forget about cash. During a crash, cash is king. Having liquidity allows you to take advantage of opportunities as they arise. It's like having dry powder ready to fire when the moment is right. So, if you're building your investment plan, don't underestimate the power of keeping some cash on hand. Now, as we near the end of this journey, let's recap the key points. Market crashes can be scary, but they're also a natural part of the economic cycle. History shows us that recovery is inevitable, and those who prepare and stay calm are often rewarded. By focusing on value, doing your research, and sticking to proven strategies like dollar-cost averaging and diversification, you can turn a crash into a buying opportunity. So, the next time the market takes a dip, remember, it's not the end of the world. It's the beginning of a new opportunity. And as always, knowledge is your greatest ally. Equip yourself with the right information, and you'll be ready to seize the moment when it comes. Before we wrap up, let us know in the comments. What's your strategy for navigating a market crash? Have you ever turned a downturn into an opportunity? We'd love to hear your stories and insights. If you enjoyed this video, don't forget to like and share it with others who could benefit from this knowledge. And remember to subscribe to Money Ocean channel for more insights into the world of finance, investing, and wealth building. Until next time, stay smart, stay invested, and keep riding the waves of opportunity. Thanks for watching.